Making money in the market takes sacrifices, but I don't want those sacrifices to make you suffer. I'm going to share with you today some ugly truths about investing so that you're not scared when you face them in the real world. And hopefully, you'll have more success in the future and are less scared of the negative outcomes of the market to come. First, everyone on YouTube wants to show you the upside of their investments, but no one wants to show you their losses. I want you to be aware that you will lose at times. Your money will go down at times. There are always fluctuations in a volatile market, and so your money won't always be up and at its all-time high. But don't let that scare you. Don't let your emotions take over and let you sell, because short-term loss doesn't mean long-term loss. The market will bounce around and will come up. So if you have a safe, diversified portfolio, don't be afraid of short-term loss. Next, timing the market rarely works. It's so hard to understand all the economic factors that will change the market or what political situations may affect specific stocks. I want you to lose that mindset and go for a more long-term and future-oriented mindset, because timing the market is so difficult. You're playing against experts, and you're not going to win most of the time when you're trying to time the market. Rather, you should go for time in the market. Number 3, emotions are your biggest enemy when you're investing. Greed and fear can make you want to sell your stocks at the lows. They can make you want to cut your losses early and make you forget about your goals. So don't let fear and greed, don't let your emotions affect any of your investing. Don't let fear of missing out affect when you buy or when you sell, because that will ultimately negatively affect you in the long run. The way I like to think about it is that you don't go shopping when you're hungry. Don't go into investing when you're scared or when you're hopeful, because that will only allow you to invest off of your emotions, not off of what your goals are or what you think the market's outcome is actually going to be in the future. Number 4, not all investments are created equal. Do your due diligence. Don't fall for any high-risk, high-reward schemes that you may be sold on Instagram or YouTube. Do your research, get the facts straight, and invest in safe, long-term assets. Number 5, taxes and fees can eat into your returns. Let's say you're invested in a bond fund making 5% annually. Then the fund manager wants to take a 1% annual fee on that. Inflation's at 2%, and you're paying 20 or 30% capital gains tax on it all. After all said and done, you might only be making 1% a year. So I want you to be aware of, after taxes and fees, what is your actual annual realized gains. Number 6, success takes time. Patience and a long-term mindset is your way to success. Don't try to take shortcuts. Don't try to beat the market. Don't get too ahead of yourself, because a long-term mindset and time is really what you need to be successful in the market. Number 7, past performance does not guarantee future gains. Just because you've seen the Magnificent Seven blowing up over the last couple decades doesn't mean that that trend's going to happen forever. The truth is, once you already see massive, unrealistic gains in a stock, you're probably already too late. It's probably going to bounce back and go back to its true value. Don't try to invest in stocks just because of past performance. Do your research into its future value. Number 8, political and economic factors are so difficult to predict. There are so many macroeconomic and geopolitical trends that are just impossible for the average investor to track at all times. There may be new laws or regulations on different products, such as, batteries for Teslas, or different raw materials that businesses need to continue their production, that will change the price and will ultimately change the stock price. But don't let trying to track all of these at the same time discourage you from investing. If you're safely diversified and have a long-term mindset, you shouldn't be afraid in these policy or economic fluctuations. Number 9, not all investing is passive. If you're just trying to put all of your money in an entire market fund and let it grow over years, that can be passive. But if you're trying to keep up with professional traders, it can be as much as a full-time job. So keep in mind what your goals are, and don't try to keep up with the professionals if your goal is to just build a retirement account passively for the rest of your life. And finally, at number 10, there's no one-size-fits-all strategy. All the people that are trying to sell you on a strategy online or on social media might be a strategy for them, it might be a strategy for millions of people, but it might not be a strategy for you. So keep in mind what your goals are, keep in mind what's realistic for you, and keep in mind that you might have a different strategy or a modified strategy from what they have, and make sure that you're aware that one strategy does not fit all. I hope this broke some misconceptions for you about investing, and I wish you all a happy new year and happy investing.